Yo, what's up, everybody? We're back in the saddle. Oh, it feels so good to be home. How's it going? Smash that like button if you're here. Let's get it going. I know I had that. Some of the streams set to private. We open up in 5 minutes. Let's see. Are people having trouble getting into the stream?
Eatory presents.
All right. Looks like we popped through DD bands again overnight. Market's moving. I'm gonna double check this. I'm nothing but sunburn. I got places that. Is that true? This Nasdaq outside DD band? Am I looking at this wrong? Nasdaq is outside of DD bands. Wow. Okay. Sunburn head to toe, man. I had 4th of July parties, beach parties, dude. It's been. Oh, wow, on the wrong. Still on the wrong screen here. Oh, you guys can see my little encoder. Hold on one second. Hold on one second. It's doing this weird thing again. Hold on, let me figure out. Don't go anywhere. Don't go in. It has all my screens are all messed up. Oh, it's didn't turn my tab on. It renumbers the screens. That is a song called "I'm Here" by Puppet. Let me send you a link for it. All right, guys, ready to get started here? All right. It's a pretty dope song. Sorry about not doing the calcs last night. I'm not gonna lie. I took a Xanax and a couple of glasses of wine later. By the time I got home, I just literally like catatonically was nearly almost carried up the stairs. I was so tired. And I just passed out. We were delayed, moved around. It was just one of those days. Oh. The flight got had some. It was an easy, simple trip. It was just I bounced around. We got to the airport way early too. The first flight connecting in, and so we had to kill like 3 hours, almost. Actually, more like 2.5 hours. So my mom and Nicole and myself decided to go drink. To a bar and had some margaritas and chilled. And then Coming Farms this up, you had a big patient. You gotta stick to the Delta 8 gummies. I know. Well, I don't know if I do Delta 8 on a plane, because I've only in my whole life I've only had one paranoia attack on D8. I'm more of like, if I want to go straight THC, I'm an indica guy. I'd rather pop an indica and just have a warm sleep. But when it's D8, I have claustrophobia. This is my one cripple in life. He's ready to trade. Let's go. We tapped the DD bands on Nasdaq. I'll tell you just 1 second. DD band, Nasdaq. Let's do top left really quick at this one here. All right. Russell good. Yes, good. Nasdaq hit the DD band. We're already yellow in irrationals. Already trade small today. Already. VIX is in collapse after CPI, which looks great. To me, that's a great sign that the market really loved what it saw, and of course we're gonna get the liquidity map come through. Look at some trade stuff. But yeah, no, I get claustrophobia. I love flying. I could jump out of a plane. I could stand on the wing of a plane. I could stand on the moon and look at the earth. No scared of heights, nothing. But you put me in a fucking 10 box with a bunch of other people, and daddy starts to get a little antsy. Don't like you. So I hate sitting crammed up in something. I have to move around. That's my thing. Hey, BLU. And so you put me on a D8 in a plane, I'll probably get paranoid as shit. John is like 100% agree. Yeah. All right. BLU, ride and hedge pressure. Let's see if I can take a few markers off the bad boy here. Pretty easy setup. Resilience is good. It's good, long and strong right out the door. Half gap. This is open, blue open right here. Let's get the liquidity map widget up here. Look at that one. Open, blue open, little V shape here. If I start to lose such pressure, I'm going to be kind of meh. Just remember, this is a already trade small-ish kind of day because we tapped DD bands on ES already. Is the DD band bot down? No, the operator of the DD band bot had too much wine with his Xanax and decided to, not decided to, but did not get a chance to even turn the computer on, much less remember where his office was when he got home. Let's be real. Those two shouldn't go together. The intention wasn't to make them go together, but if you want to turn into a zombie, that's the quickest way to do it. Like when we got home, Nicole was like, "You want some ramen?" I was like, "Sure," because we have this really cool. We buy this ramen from Costco. It's in the freezer section, and it has actual pieces of chicken in it. It's a shoyu ramen. It's pretty good. And she doctors it up with her mom's hot sauce. And I think she said, in the middle of you slurring your words, you were like, "Oh, ramen," and I was like, "Okay." It's because we were trying to connect to a bunch of flights, and we were trying to drink margaritas to kill time and always pop a Xanax on the plane, but somehow not eating all day and spending 7 hours in airports was just like, by the time we got off the plane, I was just comatose accidentally. So it was only three plus hours worth of flying too. It was not, I mean, you know, that's a pretty long game. All right, long and strong out the door. S&P 2DD band. Let's look at the final guy here. All right, moving up here to upper green band. Everybody smash that like button real quick. You know, y'all, we're back in the saddle. Click it. Hit it like it owes you money. Let's go. Click that button. Like that stream. Okay. Yes, right here. This is the upper target for ES. Nasdaq already outside the box. From Nasdaq doesn't steal the show here or guide the show here. S&P does. So S&P to D band is one of the things. We are finally below triple B, and we know how triple B works. It works to the Tuesday before the third Friday of the month. As long as you're in decay, it can hold possibly bullish until then. Market's long and strong. That's why the title of my stream is Bull Market. First to call it back in the day. First to sustain it. DD back at 90%. It doesn't get any better than this, you guys. I mean, this is just textbook stuff. How many people took a trade today? Let's get some rockets in chat. Did you long? Did you short? Did you do anything? And smash the like button. Go below, right to the stream, and click the I like the stream button. Seriously, if you do that, every single time you do that, YouTube sends an employee to someone's house randomly, knocks on the door, and says, "Hey, have you heard of Rocket Scooter? Check them out. These guys are pretty okay." Promise to actually do that. I was watching The Office on the trip. I was watching the episode. What was it? Stress Relief, where Michael was going to get everyone to roast him, and then he was roasting everyone else, and he couldn't take it. He's getting butthurt because he couldn't take it. And then he was like, I think I'm going to get YouTube on the phone and call them, see if they can come down here and film this. Oh, Michael. Okay, everybody understand, bull long up. Make sure your liquidity map module is open down here. This gives me just a little reminder of where the pressures go. Open between blue to open is a trade. Everyone see open, blue, open? Yes. Ladies and gentlemen, open, blue, open. You see that V shape? See that V shape? God, liquidity maps. It's like the market has a thing, and we look at that thing. How do we figure this out, right? Such a cool thing. Hedge pressure breaks today. Microsoft looking to the upside. Applied Materials. Southwest Airline, where I was yesterday all day. The hedge pressure breaks. Got some runners today. Microsoft, Nike. These are general breaks in one direction. Will QQQ rebalancing affect the monthly map? Absolutely not. Good question, though. Absolutely not. As a matter of fact, QQQ is more bullish on the monthly map than it has been as far as where those positions are. QQQ is just stupidly bearish. I mean, bullish through the October. Like, look how low it's gotten. I saw that yesterday. Right. See this? Now, here's the thing. The S&P is kind of flattening out a little bit. It's sustaining as a nice, clean bull ride, but there is some volatility along the way. But you have to see, right? You're going to get a little bit of selling. This wasn't something that wasn't as prominent before. But going into August, does everybody see what this looks like here? Right? This is bulls leaving, bears getting stronger. This is bearish for a week. Everybody see prominently right here? You can already see the way the positions are expiring is that you're going to have some down weeks along the way. Now, where that bounces from, you don't know, but you can see when both are pointing down, it's bullish. When both are pointing up, it's a sell-off. So bulls are exiting, bears are getting more bearish. Hey, Shiv, what up? Good to see ya. Question. Swing channel 446 calls, running stops. You get stopped out. Perfect. You guys looking great. Man, it's a great trip. I'll tell you, we did everything on this trip. It was lovely. All right, anybody want to run through some tickers before I start geeking out about my trip? I already got my trade long and strong out the door. I'm at $1,500. That was like so fucking easy. Great way to get started. God, I love it. Y'all love Rocket Scooter's new stuff. Right, Future's about to come out. Now, I thought it was going to come out in the test server. I said in a couple days for me to play with. They still got one more step to finish, so it's like maybe another day. But hopefully this weekend I'll get to play with it. Right on the edge. DIA, can we get a resilience on that? That's a great question. We could. I just don't know if there's a reason to. The one reason I say is because the Dow Jones maybe psychologically had an effect at key levels like 10,000, 15,000, 20,000, whatever. But it's not as representative of the entire market, just like the NASDAQ is. And that's why the NASDAQ is even a novelty. It would be a novelty that's rarely used. You notice how we never use NASDAQ resilience because it's not diversified as a basket. It's not going to show market depth, but Russell and S&P will show the entire breadth of the market. We could make it. The question is just should we, or should we teach that it would be a fruitless endeavor? Up to you, John. What do you guys think? We can make it if you want it. But it's just like, and it's funny is that saying NASDAQ is just as useless as Dow Jones is. It would be like a tiebreaker. If the S&P was sitting at 0 and Russell was sitting at 0 and you needed a tiebreaker to the tiebreaker, and NASDAQ and Dow are both doing slightly better, you say, okay, maybe that's bullish then. So it would be like, in all honesty, the default loadout is about to be S&P and Russell instead of S&P and NASDAQ. So NASDAQ resilience is going to be taught through the lessons that it's used as a tiebreaker in case S&P is at 0 and you need to see some kind of tie. Since NASDAQ and other ETFs and the Dow Jones themselves are just specific to like a sector or a small set of stocks, then they can be used sparingly, just like you can use the XLF just for financials. And so I'll let you guys decide. Yeah, it would be awesome. Yeah, it would be awesome. It just, you wouldn't use it. You're always going to use the S&P 500. Let's just say, I agree, it'd be awesome to have resilience for everything. I want to have sector resiliences, one for each of the sector ETFs. Now, here's the thing. You're only going to be using the S&P and Russell to trade the Dow, to trade the NQ. Because you want to see, because those are the ones that are going to yank the other two around. Now, in general, you're going to use them if you want to day trade the other two. For quick scalps, but if the S&P disagrees with what your DIA says, like if DIA says fill the gap down and S&P says fill the gap up, you got to trust that the S&P outranks the DIA, and it's a stronger tide, right? And so it would likely, and again, this is just speculation. We've never put them side by side to test them, but I would always just assume that there's no way the Dow would be selling off if the S&P's rallying. So if they disagree, you have to be trained that the S&P would take precedence. Speaking of Russell resilience, where's my Russell resilience on here? There it is. Okay. She's beautiful. Everything's nice and clean, long and strong out the door. It's a honk from here. Does everybody see this trade? This is the S&P. And y'all want to run some monthly maps or do some liquidity maps? Since I'm back, I'm ready to roll. So let's we can do some fun stuff. I can show you how to read liquidity maps. We can play lightning round. I can show you a trade plan. As Cotton has said, because it's not cap weighted, and he's correct. Cotton the man. So smart. And again, loving some of you newer folks come to Rocket Scooter and you're already very versed in market stuff. He understands why it would be a kind of a meh effort. It's even the, you know, you need these cap weighted indices give you, it's so much stronger. You know how like when resilience gets a little jiggly whenever S&P is like at the middle and then resilience is like sometimes? That's because you got like Microsoft or an Apple or something yanking it around. So being cap weighted shows the reality of just pure money flux into that index. If it's not cap weighted, then you're giving unusually higher weight to small cap stocks and usually lower weight to large cap stocks. And it doesn't really give you an accurate view of money flowing in or out. The trick is that if the stock market was a basket and I put $1 into that basket, it doesn't matter where it goes, cap weighted index would reflect it. If I put $1 in the basket and somebody bought stock number 30 in the Dow Jones with it, resilience would move. If someone bought stock number 1 in the Dow Jones with it, resilience would move more. And that's not what you want for resilience. Exit SPY trade. Right here, open, cut a little bit, hold the rest to hit EV band. That's it. Or look for any yellow lines or red lines or gap fills in the way. Remember, Kevin Foley. Everybody, type in chat really quick. What are our 5 exit rules? Okay, ready? This is an exercise. We're going to be back to the saddle. I'm finally starting to, the wooziness from the Xanax is going away from last night. Now the speediness from the Adderall's kicking in. So now we're going to be able to actually do some fun stuff today. Go ahead and tell me what are the 5 exit rules that we have. 5 exit rules. See if you guys remember them. I only use 5 rules to exit. I have 5 different things I look for an exit. Liquidity map. Click the LM button right here. Kevin Foley. Chase Reed next resistance. Yeah, he gave the lazy answer, but that's the answer. What are the next resistances? Ready, set, go. Next resistance. I'm going to type since none of y'all typed it. Number 1, exit rule, gap fills. Number 2, DD bands. Number 3, liquidity / illiquidity pockets, i.e. opposing walls. Number 4, exit by 2 p.m. Get that? And let me show you where this is in the Discord. Go to the boot camp. Go to number 3 exits, and it has them all there. Last but not least, when out, which doesn't apply today, but when out, well, I guess it can apply it doesn't necessarily apply to yellow lines, red lines. I don't have any on the upward side. We have a red line here. There you go. Look, some of you guys have been watching the classes. Very simple. Okay. So let's do our gaps, right? Let me go to SPY, go to the day chart. Let's go here. Start on my drawings. All my gap fills. Okay. I keep history of all my gap fills, and you can see right here. I'm going to lay out again. I love this. I wonder if this is an old MHPHG. Ignore that. I don't know what that came from. We got a gap fill at 451.24 right here, or give or take 451 and some change. You guys know how we do gap fills. I measure them, I keep track of them, and I make sure I know where they all are. So in today's vicinity, there's a gap fill relatively 25 points away on the S&P, you're gonna hit DD band before you get that gap fill. But this is a target for the next couple of days, right? So number one, you always know where your gap fills are in the vicinity. Oh, that's considered. I know what that is. That's anytime I clicked it and dragged it, it remembers as a drawing. Oh, you ever clicked your walls and move? That's what that does. Anytime you click them and move them, it's now considered a drawing. Well, ain't that cool? Not cool, but it's cool to figure out what was causing that. So essentially, anytime you find an X resistance, as I was making fun of Chase, Chase knows that that is the correct answer. In the simplest sense, you buy or sell towards, or you buy from somewhere and you exit somewhere, you sell from somewhere, exit somewhere. You trade from somewhere to somewhere. Everybody don't mind clicking the like button on the stream. I like it when you guys show the algorithm who's boss in the trading world. All these weirdo paper traders out there streaming. When tens of thousands of people like to watch them. Apparently there's there's a club based around blowing up accounts and being silly. But if you guys want to help the algorithm out, get a little bit of growth here in this channel. Who am I kidding? We're one of the biggest paid trading communities on the planet, but on YouTube, you know, a bunch of freebies. Videos are free. We're gonna try to grow in this world too. Click that like button. We love you. Every time I go to YouTube and try to watch other streams, it just is like, I don't know if people just don't. People don't like to watch things they learn with. People like to watch things they can just copy. That's what I'm starting to learn about the world we live in. Is that a surprise to me? A lot of people don't teach on the streams, and I'm like, well, why? What's the fault? What's the allure of watching something you're not learning from? Who knows? But anyways, TV charting inside the Roxy platform because indicators are really on. Drew says, "Is trade debate? TV charting inside the. Can you add other indicators overlaid on Rocket Scooter? Not yet. In the future, you can be. So let me reveal some of our milestones to you. So right now, while we are staying with Trading View for now, Trading View is going to power like our DOM, our order ticket, charts, and of course they have PineScript to allow you to overlay your other indicators in it. So you can either write your own, which we don't have that feature yet, but you have this one right here as well. You can add their traditional indicators, and it will save your drawings. If you save you save your layouts and stuff here. So the answer is yeah. Now in the future, obviously in our 5-year milestone, we'll probably be making our own charts, our own everything from scratch. Not that we don't like Trading View. We love Trading View. It's my favorite charting platform on the planet. It's because there's limitations in the white label that we can't draw everything we want to draw. And so there will be a point where we need another solution. We'll have to figure something else out. So we would just replace the charts. We'd still keep their DOM and everything else. We like all the stuff that we get from them, but the limitations of like what we can and can't change or make, it might be a limit. So when we make our own stuff, the first thing we'll be able to do is that you make custom indicators and all that. So yeah, you can do Trading View's normal stuff we all have here. You can put everything here. Indicators that we have are listed there. If you want something we don't have, we can obviously make it. One of our next releases is our vendor that comes out after futures is what we call our vendor marketplace. Vendors will be able to code their stuff on the back end like we do with Hedge Pressure and sell their tools on our platform as well. So we'll be able to open up the doors to other tool creators. That's one of our big projects. And we're currently in talks with a very large entity in relation to that. So the idea is you'll be able to have your own ability to program stuff on the back end and sell it for a subscription inside a Rocket Scooter, or even make your own tools for yourself. So if you want to code some super secret indicator, we'll be the first in the world to do this. You won't be able to have this ability anywhere else. You know, when you have a hedge pressure, you want to program it on the back end on a server somewhere, and it broadcasts to everyone's platform, and you can charge a monthly fee and people can't see how the code works. That's what we already have. So we're going to let people do that and distribute their top secret tools. It's going to be a massive thing we're releasing. We're excited about that. So that's so we can get more tools to people, not just our own. Okay, so number one, gap fills. Anytime you fill a gap, that's an exit target. Now, up or down. So what a gap fill is anytime the market opens, right? You always open a different place when you close. That is what supply and demand imbalances between the MOO and MOC order process create. Anytime you gap up or down, you always want to mark it. Let me give you an example. We're just going to mark what's going on in the S&P. Tons of gap ups. I'm pretty sure I've been lazy on this during my travels. But you can see anytime that a green candle at the top has no intersection or a red candle at the bottom of the body has no intersection, then it's an open gap. So let's look for some of them. There's a gap between here and here, right? We closed here and gapped up there. So I'm going to go ahead and clone this little guy here. And MarketScaler will remember all your stuff, so just draw them. And a good exercise tonight if you're new to the group, just go ahead and do this. This is one thing you always want to make sure you do and never forget. Okay, so we pass through there. And anytime you gap through an area that had a gap, it also is considered filling the gap. So just FYI. So like an example is this day, you see we gap down, right? We never necessarily touched the line, but yesterday we gapped through it. That's considered closing the gap. So a couple more examples. Let's find some. There's a day here. Is everybody, anyone confused? Can you type yes in chat if you get it, or no if you're still confused what I'm drawing here? This is one of the 5 exit rules that we have. Anytime you fill a gap, your day's over. Markets move on supply and demand imbalances. Buyers try to find sellers, sellers try to find buyers. If we gapped up from here to here, then there's a buy imbalance between these 2 days, both at the open and close. The net sum is a buy imbalance. So anytime you're selling, sellers and buy imbalancers, buyers imbalance, buy imbalance, sellers, buyers and sellers meet each other, markets liquid. Anytime markets are liquid, you exit the trade because liquidity is the maximum squeeze point of all traders and everyone's losing. Sellers are squeezing buyers. Buyers squeeze sellers. So everyone's losing at that point in the middle, or at best breaking even. We got it? Okay. Everyone else teach that? Gap fill is like if there's one in the way, then that's your target for the day. And that rhymes, and don't try to rhyme all the time. When I get up, I show up. Don't want to make you guys throw up, but at the end of the day, I know how to lay some rhymes to make you play a little bit better. So let's go. I'm not quitting my day job, though. Here to here. It's Eminem. It's Eminem. Okay. There's an indicator on Trinity for gaps. That's pretty cool. Really? We already have it? Oh, it's called bars. One of the things we're going to do is automate a gap fill indicator. I need to write that down because I need to do my milestones today. Hold up. Okay, gaps number 1. I know that Addie's kicking in hard. It's a pure... I only did a quarter of what I normally did. I don't want to get hyper. A quarter of my normal dosage. Keith knows. Where's 451 coming from? There's one here called gaps. Do we have it? Oh, we don't have it, huh? 451 is from here. April the 5th, Keith. Nah, dude, I ain't drinking energy drink. We're on a new fitness kick today. So Nicole and I just restarted F45. So we're going to work out twice a day now. That's our new thing. So we're doing F45. I'm drinking a canteen of water every morning. So I'm getting super serious about fitness. We both went to the beach and we were like, oh, kind of starting to look good again. Well, let's keep going. So, yeah, L45 is legit. I really enjoy it. If you've ever done it before, it's really good. We've done it. Oh, we're going to get back into it really hardcore. I'm training for a marathon. So, health is the most important thing in the world. I'm not drinking energy drinks anymore, you guys. Like, I canned that a long time ago. The doctor said that shit's going to kill me. It's like, all right. Gotta get rid of that. Okay, so anytime you have an imbalance, buyers and sellers meet each other, gap fills is one thing. Another thing is yellow lines and red lines. And in a similar sense, they're the same exact concept. It's when buyers and sellers meet each other. Red lines and yellow lines are something I keep a history of. Anytime that you have, now again, I've been again lazy on my trip. I haven't done the upside. There's probably a ton of them the last couple weeks. But as you see, I catalog all my yellow lines as targets and all my red lines up and down as targets. This is a technique we teach, also will be automated at some point after we get futures data. But these are also demand and supply demand areas. Anytime you have a large event that kicks the market lower, creates an anchor point, red lines are imbalance points that can be rebalanced. Market maker rebalancing points become illiquidity pivots. So markets are illiquid, like moving in one direction. Then you can connect with those in irrational areas, and that's a great target to trade with. So an example is if the market collapsed on a catalyst, this is really quick, or an event. Let's go way back here where those red lines are created. Let's see if we still got them here. All right, here. Something happened that day, okay? This particular day. I don't know what day it was. It's Tuesday 9 in the morning. Sounds like it was some kind of, probably something on the calendar, right? Something happened, market collapsed, okay? We had an anchor point, impact, run length, and then a yellow, okay? This one day created 1, 2, 3 pivots to play with. Keep your eye on this 43.38, okay? Right here. You see this guy right here? This is going to be a pivot as we continue to trade. Like forever. Well, actually, in this particular, when we roll into the new contract, we actually didn't even interact with it. We gapped above it. But if you see that this, let me do this really quick. 43.05, 30 points. So 30 points from here to 80 would have been there. So equivalently, this even we roll into a new contract, about 43.80 where my mouse is exactly where this yellow line would be on that contract, which you see there's pivoting against it. Because we rolled into a new contract that day, right? Isn't that correct? We didn't gap up. I'm mistaken. So, either who. These yellow lines are always going to be areas of supply and demand, so are the red lines that created them. So when you return, you're going to have price interaction with these points. So normally when you're trading inside you're going to have this decision every day. If you're trading inside the DD bands with nothing in the middle in futures are also an exit target. So first we talk about gap fills and equities. Okay. Number 2, DD bands exit target while you're on the inside. When you're on the outside, yellow lines and red lines are great exit targets. So trading out here, there, trading out here, there. So when markets are liquid or, not irrational, irrational, anything in the box in futures is considered a target. If there's a yellow line in the middle of the box, it's a target. You see that right here? So it's a target. It's a target. You see how it plays around there? So scalping and exiting at those places are going to be good, safe places. And when you're on the outside and markets are collapsing, you have nothing else to go by. you always default to red and yellow lines as to be your exits. I never had an uptime energy drink. 2 a day, geez, not 2 F45s a day. No. 2 workouts a day. So one of them is going to be an F45 not every day. It's like that'd be 3 times a week. That's too much to do that every day. I'm going to do F45 3 times a week, Pilates once a week, yoga once a week. I thought about doing running as my second exercise, or rowing, something for cardio, because I got to build up stamina for the marathon. Okay. 2 p.m. exit trades no matter what. That's the easiest one. And then liquidity pockets. All right. Up $1,600. Let's go. Just hang in. So normally what I do is I'll trade to first resistance. Open V, open. Here on liquidity map. Trim a little, hold the rest of the next resistance. As you see, there's nothing in the way. DD bands are going to be right about here, give or take. And when everything in Rocket Scooter is automated with futures, well, the next step is to create our futures indicators. We're going to have, one of the cool things that we're going to have in the order. Now, has everybody here seen our new futures stuff yet? I had a top secret meeting with all of our team. You guys want to do another demo today where I go over the new platform and show it to you? Make sure you come to check out the stream. Check out the Discord. In the stream, go down in the description. There's a link to the Discord. Join the extended trial. We did it before for just people that were in Pro Plus, okay? So now everyone who's in the extended trial, we will have a public meeting to demonstrate our futures and show you what we got. Everybody come today. That was for Pro Plus only. Everyone come today and check it out. As soon as we do futures, the very next step is to create our indicators for futures. Remember, this next patch is going to be huge. It's our biggest patch to date. We're going to have futures broker. Number one, a futures broker will be working with Rocket Scooter. You'll have official brokerage services, not just connect to futures account. You will have a broker. You'll have a phone number on our website you can call, talk to brokers. For whatever reason, you need to talk to one. Open account, close trade, get some advice, whatever. Number two is we'll have connection over 80 FCMs. You'll be able to connect to all your different FCMs. As a side path, as soon as we finish with this surprise news announcement, we are actually going to go get a Rhythmic connection so all of you can trade all of your trader funding programs in Rocket Scooter as well. Figured out how to do that. Had a few meetings while I was on the beach, talked to some other people about this and that. So now, anything that has a Rhythmic connection that you do your funding programs with, buy the Rhythmic connection. You can log into it in Rocket Scooter as well. So that's not coming out with this patch. That's immediately being shoved in right after this. So we're going to have a Rhythmic connection on top of it. So name it. All your trader funding programs, you'll be able to use our stuff to trade with. Okay, cool. That's not, but that's going to be next. You ever notice if you ever go buy one, you have logins for different places. So, all right. This patch, we're going to have the futures broker, futures trading, live futures accounts, so no paper trading yet. You're going to have a connections tab at the bottom. It's going to allow you to connect a bunch of different things. Right now, it'll just have connect your Discord, connect to the broker. In the next couple more patches, we're going to have other partners there you can connect to, their services and stuff. Big things coming out of the connections tab. The thing with Rocket Scooter is connections. We're connecting your platform to everything you do. We're connecting everything to everything. Discord is very important. When you log into our site for the first time, that's the next patch as well. You're going to connect your Discord. It's going to automate your experience down the road and also connect you to the platform from Discord. Number one, it'll give you your roles automatically. Number two, when you upgrade, it'll upgrade you in the Discord automatically. You'll get a DM from the bot that's like, thank you for upgrading. You should see that this channel and that channel is now active, blah, 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 blah. Several accounts also possible. Several Rocket Scooter accounts or several futures accounts. What do you mean? Hedging. The thing with Rocket Scooters, you'll be able to trade all your brokerage accounts in one place when we're done. So you can have, it doesn't matter who your broker is, we'll connect to it if you can. Once we're done. So you'll never have to leave our platform. But you can only have one Rocket Scooter account. In the exit rules section of the Discord, you'll see that they're laid out for you. Go through them very quick. Gap fills. Anytime you fill a gap as a buy and sell imbalance, it gets filled. Once a buy and sell imbalance is recognized, like a BLU that's trading up and hits a DD band, there's going to be sellers there. I always trade to where I know resistance will be, and I don't try to overextend. I don't care about missing 80% of the move. I take the move that makes sense and gets out, just like today. So gap fills. I'll skip this for now. Red and yellow lines, talked about that. Exit at 2 p.m. no matter if you're winning or losing. When you're inside the DD bands, you touch the DD bands. And finally, liquidity pockets, which we made one of these. It's very simple. Anytime you touch the edge of an illiquidity pocket or touch the middle of a liquidity pocket, markets no longer have the steam anymore. Clearly, trading in a bull zone hits a bear resistance, so I'm going to exit. Buyers and sellers find each other. Buyers and sellers are in equilibrium. There is no pressure anymore. This is like an extinguisher that extinguishes the fire. These two are also exit targets. So when I trade, I normally trade to the first resistance, close out most, and then I hold a runner to the next one. That's pretty much it. Will it draw support and resistances automatically? It should. We have to think about a clever way to do this so that your line, you see how it says drawings? Like, drawings will be where all your support and resistances are, and your own drawings. So I'm thinking about having like another display toggle that says exits or support. Actually, I can't say exits because it looks like it's trade advice. Resistances, the automated ones. Gaps, red lines, yellow lines, etc. Will be a thing called resistance. As a matter of fact, I'm gonna type that right now in the wish list. Look at that. I love coming back to work and inventing something within an hour of the day. And then we'll just have one button automate it all. Okay, one button click. Fills, then we'll have them individually there, and you can program the display widget to modify what you do want to turn off and on. Gap fills, red line, yellow line. DD bands. Call it auto drawings. Yeah, we can call it something else. The one thing is that we're redesigning the platform. If you guys haven't seen the platform redesign, it's funny. Honestly, I just gonna tell you guys, we are growing so fucking fast. It's so hard to keep up. We can't even hire people fast enough to keep up with it. And so one of our project teams is redesign the platform. Tell me if y'all like that. Let's put them side by side. This is a mock-up. Well, this is in Figma, but this is the generates the HTML code while you design it. This is the new platform. So we're redesigning everything. We've been building this secretly for a while. A lot of our stuff we do in secret, we don't tell you guys about it. Y'all think that's sexy or what? This has been going on for a couple months. The back and forth. Much cleaner, much easier, much more distinct. It solved a lot of problems that we had before. Space saving problems. We'll still have the classic version as like classic layout, but we'll have new layout as the new layout, right? The whole project team working on this. The idea is, now I'm not sure, we've made some changes since this mockup was released to you guys. Well, this is basically it. It'll have more of a just a cleaner look. Like the buttons will be very easy to see instead of tabs. You know, everything will be movable just like it is now. All of your broker stuff will be here. So these buttons here will open up your trading widgets. These buttons will open up your side widgets, and clearly it's a little bit more distinct and easier to see what these things are. Font was one of the major concerns, and like I said, this is one of the things I love about my job. We've had so many meetings, right, about fonts and colors. It's like it's so great. I get to be an artist as well. Yes, the font was the biggest reason to make a change. Now this is beautiful. I'm not gonna hate on my first platform here. Beautiful by itself. It's a lovely thing and it's a beautiful thing. But we're making the platform as fast as we can and doing our best to make it look good, rather than making it look good and then putting some good stuff in a little at a time. As you guys know, we took every shortcut we could. We went to TradingView to get the charts instead of build our own. We got all the data here instead of making it look pretty first, right? The fonts could use a little work. This could use a little work, right? This is just add. This is the word add there, right? It's just, we need to get it out and keep going. The idea that we can turn out this entire platform in a year's worth of time since release with all these features, 2 years on the back end was great. And so now in the last couple months, as we've been, you guys have been supporting the group and obviously a lot of income, we're sourcing out to redesign and make it look good. The font is a big change to make it easy to see stuff. And there's also different fonts for different purposes. Will the windows snap into place? That's going to be one of the next things we're going to work on in the experience side, is that the windows can snap. Yeah. So that's it. You can see that everything's still there. It's all the same. We're still debating on how the walls will look. I actually rejected this design. Pink and green. I don't know if I like that. We're going to try something different. But everything else is pretty much the same. Your account manager will be here. Click the plus. Opens your account. You can see what your trading accounts are doing. I don't know if this is a little big up here at the top. And the last thing is your avatar. Your avatar is going to be your biggest thing at Rocket Scooter. We call it your cadet. You're going to click your cadet, and your cadet's going to have all kind of things it can do. Your cadet's going to like level up like in a video game, earn points. The education's going to have like trees. Go through these modules. Okay, branch to these modules. Okay, you have to finish all of this. Take the test, get a 90. Once you do, you get a bunch of points. You can unlock any one of the trees, assign the points to open up new videos. And as you push your way through in an uninterrupted process that we design, you accumulate these points, quote unquote, and the points you can spend on all kind of stuff. Most of you will spend it on a discount to your membership. You finish all the videos. The goal is you'll get enough points and you can unlock 10% off, 20% off your membership as a reward for learning. You can buy merch, you can buy other things, you can buy other features, you can buy other packages, you can buy other indicators, other tools that would normally have a price. The more you learn, the more you earn, the more you earn, the more you can unlock freer stuff. And that's one of the cool things your cadet's going to be able to do while they go through your flight school. Yada yada. Or rocket scooter school. Where'd my platform go? Oh, there it is. So the educational tree and the educational gamification, as we call it, is something we've been working on as well on the side, and that's a huge new release as well. So the idea is that you'll have access to your cadet. It'll connect to your Discord account as well, your Discord bot. And you, the bot, the platform are all connected together, and it's going to be a really fun experience, even just for any community. It doesn't matter if it's a trading, gaming, books, whatever. As far as communities go, we're going to have fun with what it is we do every day. Hopefully y'all like the new stuff. So when y'all know that I get busy and you're like, Matt's always in meetings, we've got 22 people work for Rocket Scooter now. It's insane. I built an org chart the other day. Biden speaking at 10:30. Yeah, let's look at that. Let's look at the financials for this week. The calendar for this week. I really want to look at the continuing jobless claims, initial jobless claims. Things are looking pretty solid here, I would say. Not terrible, not great, just okay. Initial jobless claims are down from the peak. They're up from the last print, which again, it's not great. It's not terrible. It's not getting worse, not getting better. This guy was a slight uptick as it's been trending down for a while. There's just a slight uptick. And the continuing jobless claims are people that are still able to file for unemployment insurance, which means that they are getting their jobs back beyond the first initial claim. So it's the sum of all people still qualifying. Now, what qualifies you for unemployment insurance is not that you're unemployed. This is different than the unemployment report. If you're not working, you not necessarily qualify for unemployment insurance. It means you were working for someone, you got laid off, and your company had the ability to you qualify for benefits. So you can consider this a direct metric of the job market, not just like people on welfare, people on different other programs. This is people on the unemployment program, right? So those other ones are outside of the boundaries of this graph. JP, you want to join me? I'm going to put out some things to resumes pretty soon for different tasks as we see fit. But we appreciate you guys supporting community. We really do. Like I said, it's going to be kind of like working for Google. We're going to have jobs that don't make sense to people that don't work for this community, like VP of Fun and Entertainment. Like, what? This is a trading community. No, I'm just kidding. But seriously, we're going to have we have special creative needs, and let's just put it like that. Creativity is a big part of our drive, being different than everyone else, and having a vision that really just either softens the experience, helps traders connect to what they need to connect faster. You know, that's a big part of what we're trying to do. The platform redesign is to make it more intuitive out the door and cleaner. Text is bigger for a reason, to draw your eyes to different places. Things are designed to save more real estate, to give you more space, to be able to move windows around more efficiently and things like that. Okay, back to what I'm saying. This jobless claims is for us for a way to gauge how the FOMC is going to change interest rates. Obviously, the labor market starts looking really bad. Jay Powell's not going to push very hawkishly in his dialogue, where he's going to not really press really hard to force people to get laid off. If you force people to get laid off, you're going to recreate the effect of COVID, where you force people to get laid off, and you're going to have shortages and inflation, all that other stuff. So since inflation is triggered in this mode called cost push inflation, you cannot push the labor market any worse than it is, or else inflation happens because of shortages. And you can't, the FOMC can't control that. So they're just going to push rates as far enough as they can to achieve their goals of curbing the inflation not caused by the shortages, and not push it too hard that they cause more layoffs to make it worse. They have to drive a really tight ship. So as long as continuing jobless claims are getting worse, Jay Powell's not going to raise interest rates. And that's what made me call October of last year. Remember whenever Matt was like, okay, Powell's going to go to zero by first quarter, and people thought I was silly. We had 75 basis point raise here, and I said Powell's going to stop raising rates immediately. That's because I understand the economy, why we're in the situation we're in. Do y'all understand that too, right, everybody? The big fat yes in chat if you remember this conversation. Yes or no if you don't remember. I'll give you a 1-minute version of it. Two ways inflation can typically happen. Number one is economic activity that is stimulated. Bubbles. Bubbles can cause prices to go up because everyone's in surplus. Everyone's spending money. So just ask them to spend a little bit more. You make a little bit more. Welcome to capitalism. The other way that inflation happens is that you have a shortage of goods. You have a shortage of goods and high demand. Demand exceeds supply. Therefore, prices go up. And that was caused by in COVID, you laid everybody off. Then everybody comes back to work. So everybody starts making money and wants to buy stuff, but there's a logistical, time frame to make something and ship and get it to the store. So shortages made prices go up. Stock market was crashing in a recession, or selling off in a recession. So if it sells off too hard, people get laid back off. You get back to square one. Inflation persists. So people can't get laid off further. So it means the stock market needs to kind of not crash. Number two is you can't press interest rates so high that you kill the credit market and people don't loan out money. Banks don't loan out money to borrowers so they can go out and spend to keep the economy growing and that GDP going, right? Because people that spend, a company will hire someone to make something, and that person will go out and spend, and that company that they spend to will hire people. And so that economy starts speeding up when you inject credit into the economy, or sorry, credit into the market. It creates jobs from that effect. So that also lowers inflation, more people, that kind of inflation, because you start to rebalance supply and demand. So ideally is Jay Powell can't crash the stock market and he can't crash the labor market by pressing interest rates too hard and can't kill credit. You can drive a really tight ship where you lower the stock market to lay off just enough people to bring wages down, but you don't crash it. You raise rates just enough to taper off the effect of bubble type inflation without having the reverse effect on the cost push side. And they did. They beautifully did it. And I knew the one metric that mattered was this graph. This is the graph that made me call it. The minute the continual jobless claims started tapering up, while the market makers are positive, we had a liquid market, I said there the bottom was in. And as you see, as people have still not been able to fully get their jobs back, we're getting like no rate hikes. And I mean, it's just so slow and it's a zero. No rate hike, no rate hike. You see that? We predicted that in October, and so will you. If you come through our classes, we teach you how to think like this. In October, everybody was doom and gloom on the market. In October, I bought Apple right for earnings, and Apple fell 20%, and then I bought Apple a lot. I quadrupled down on Apple. Don't ask me how much money I made in October. You'll probably throw up a little bit in your mouth, but let's just say on average, of all the things I had, between 500 and 1,000 calls in each thing I bought on the cheap, and they went up thousands of percent. I made videos about it. I don't even have to trade all year. You can trade like that once a year. You don't have to do anything. You be smart and get ahead of people. It's a part of this game that matters. So the idea is that this is very important. As long as this number is high, you can bet that we're not going back to rate hikes. Now, as this number is trending down, it means the economy is actually in a place where we're creating jobs. People are going back to work. If you were to, now you have to look at the two of them together though. If this is flat, which means this is every week new people get unemployed, okay, or get laid off. As long as the layoffs are the same, and the total people that qualify is coming down, then okay. The total people could be coming down because fewer people are getting laid off as well. So you have to normalize the first one and analyze the second one. The second one's flat. This one right here is flat, which it is, flat-ish. Okay, check. These are coming down. Great. Oh, that's good. So no matter how fast, there's a lot of people getting laid off, but overall, there are fewer people that qualify. It means people are going back to work, or they no longer qualify. So as long as people are going back to work, it means jobs are getting created. And well, you can probably guess that's happening in the tech industry. So there you go. Welcome to real fundamental analysis. This is as far as I go. This is my entire look of the market. As long as this number is coming down, if it goes down really good, Jay Powell's going to start raising rates again. If this holds flat or goes up, then that's bad for the economy. Because this number has been trending down, I finally made a call that the recession was over. We have the key effect. People are going back to work. Jobs are getting created in the jolts. I think the last was a miss though. But creating jobs and GDP growth quarter over quarter is up. Those are the two major key signs that recession is over. Let's see, and then we're done. You guys want to show some rocket scooter stuff? Look at monthly maps in a second. Any tickers you want to look at? Other than that, I'm going to go to the Discord and we'll do a private Discord meeting. Everybody's a member, or if you're in the extended trial. And at the end of this meeting, I'm going to show you how you get the Pro Plus at less than $100. Lock it in for life, because that's going to be how you get your futures data. You have to be upgraded in Pro Plus. Your 35 a month trial does not have futures and will not have anything related to futures. And I'll talk about that in a second. Jolts. Job openings. So as you see, jolts are a position that's available and open, looking to hire somebody, and the job can start within 30 days. You have a suitable despite whether a suitable candidate exists or not. So no bottlenecks in labor demand and labor supply. It just means you have a job that you're willing to fill in 30 days. You need that job. So as you see, since pre-COVID, even though this is from all the unemployed folks, right? Post-COVID, these are jobs that are still open. You see how JOLTS are still really high? See how like really high that is? It's a lot of open jobs. Now on the trend, as you see, JOLTS are coming down. What does that mean? Well, we have a lot of open jobs, and those unemployed folks that no longer qualify for benefits, well, they're the ones filling these jobs. And even if the JOLTS start to trend up, it means jobs are being created that need to be filled, or people are going back to hiring, i.e. after COVID and your mask mandate comes out and then your vaccine comes out right here. Was it August? Right here? Where it was. Yeah, this is where the vaccine came out. You can see that everybody started saying, well, shit, everyone come back to work. Let's open a bunch of jobs and let's start filling them. They open jobs faster than people are willing to go back to work. And now jobs are getting opened slower than people are willing to go back to work, which is why it's trending down, which is the supply and demand between the available jobs, people willing to fill them. So here, while jobs are getting created, people are filling them faster. And how I know jobs are created, because JOLTS in general are high. This is millions of jobs that need to be filled. And this shows that they're closing out. Now, JOLTS can also show the other thing is that even when you're not in that kind of labor surplus, this could be bearish for the market. JOLTS go down as people are closing the job. Like we're not filling this job within 30 days. We're firing you and eliminating. We have 5 accountants. We only need 1. So we're firing 4 of you and closing the job out. Well, that would bring the JOLTS down. So you have to read it in the environment that you're in. Overall, you can just use it as a bulk effect. The number is high. Okay, great. We have a lot of open jobs. We have a lot of unemployed people. A lot of open jobs. Great. You take the round peg and the round hole and put them together, and now you got simulated economy. Now, if the JOLTS start ticking up in this environment and unemployment's not ticking up, then it means jobs are being created. So like an example is I have 5 accountants and I fired all 5 of them, but I'm going to hire 5 new ones. Then 5 more people are unemployed. That should go up. And the JOLTS should stay the same. You got to look at it together. So if unemployment goes up and JOLTS stay the same, it means people got fired and they're looking for better candidates. So they're going to recycle and get 5 better people from that job pool. If the JOLTS go down while people go up, then those jobs are eliminated. It means a slowdown. So you look at the same thing, they pinch together or pull apart. Just like we look at the Commandment Traders report. You do the same kind of analysis. So that's how I predict these things. Right? I like to do it that way. So JOLTS are going down. Continuing jobless claims are going down. Great. They're not making any new jobs. The jobs that are still there and vacant are now getting filled by candidates. Why is it taking this long for them to get filled? Why don't you guys let's see how smart you are, and then we're going to close out the stream. Why weren't those jobs getting filled back here? And so let me start over. And this is a fun puzzle. Remember, trading is all about solving a puzzle. Put in 5 minutes of work here. The difference between you and a millionaire in the market is this extra 5 minutes of work that they do every day. Okay. JOLTS. Job openings. Okay, it's not growing, but at some point it started inflecting down. And at the same time, unemployment claims. Think ahead, and this is how don't pay attention to what anyone else does trading. Try to get ahead fundamentally. It doesn't matter what kind of trading you do. Actually, jobless claims. Continue. Try to get ahead fundamentally. You'll be better than anyone else that you know and are seeing markets if you try to get ahead. Ralph is saying there's two different types. Yeah, I always say there's two different types of inflation. Number one is from economic stimulation, overstimulated economy. The other is due to the cost of production. I don't want to go to a huge conversation as to what causes the latter. The cost of production goes up, therefore the cost of the goods must go up, which is the rise of labor, the cost of labor, cost of transportation, cost of storage, cost of raw materials, all that stuff. We went through that all last year. Dead whole topic. Why? What happened between here and here? Try to piece it together. If you understand this, then you, grasshopper, have defeated your master. Let's go back to COVID. Here's this. This is stock market, okay? Okay. Let's just use this as a gauge of where the calendar is. Everyone got laid off. Everyone comes back to work. Everyone got laid off. There's a shortage. Let's do the cost of goods. Cost of goods way up, right? You have everyone laid off in a bunch of jobs. Okay, so you have lots of jobs the minute market's recovering, and then lots of unemployed people. Now, people return to work sporadically based on their perception of safety in the workplace. Now, I'm not coming back to work and getting COVID. Fuck you. Or I'm coming back to work immediately. Fuck all you. Blah, blah, blah. Y'all are pussies. I'm going to go back to work. I'm going to put on... Why do I always talk with my own people's Texas accents whenever I make fun of... make fun of those people? Fuck you. I guess it's funnier to say fuck you when you use a Texas country accent when you say it. Anyways, I'm brave. You're not. I'm going to wear a mask. I'm coming to work. You need 10 truck drivers. I'm the only one. You better pay me double for the risk I'm taking. And because I got to pay for stuff, and stuff is very expensive right now, and I'm going to come drive for you, you better pay me more. You need me, and there's 10 other jobs, and I'm going to come back and work and risk my life. Let's pretend that we're all in this. Let's all, just for the sake of argument, believe that COVID would have killed everybody. Okay, I'm coming back and risking my life, and there's 10. I got to feed my family. I got to do it, so I got to work. And there's 10 positions open, and everyone needs a driver. I'm the first one. You pay me what I want, or I'm walking down the street. And the company's like, fine, I'll pay you what you want. And what happened was wages went up. That's exactly what happened. It's that mentality, though. Companies were desperate to hire, and prices went up because of the shortage, and therefore companies had to pay people so that they could catch up and afford the things that they needed to sell. So wages went way up, and that's exactly what caused inflation. So why did it take this long for... I'm giving you the answer. Why did it take that long for people to finally start filling those jobs? Because the power of the supply-demand imbalance of the labor market, which was in the fuck you, pay me what I want, is now back in the hands of the company. Fuck you, I'm not paying you anything. There's hundreds of people that want to fill this job, and you want twice what I'm willing to pay? What is this, 2020? It's 2023, bro. You're going to accept... Actually, normally you made 120, and in COVID you made 200K for a little bit of time, and you want 180, 170 because you bought a house, and they're at inflated prices. Not my problem. There's hundreds of truck drivers and unemployed needing jobs. I'm in completely saturated labor pool. I can pull anyone else I want. Do the same job for less. It's a power shift. As this grew, wages plunged, and companies just waited until people were willing to take less money for the job. It was like a battle between us and them, right? So this is the thing. Yeah, there's all kind of there's the Teamster strike. I was reading a lot about that. So the thing what happens is it's just always this like lead lag kind of thing about how these things work together. you're not going to be able, you're starting to see the continual unemployment claims finally coming down because companies have just been holding off and not filling it until they can find candidates willing to work for less. And how do you find candidates that are willing to work for less? Well, ladies and gentlemen, the longer you sit unemployed, the more desperate you get, the farther behind your bills are, that you're going to stop being picky. Once you get slapped in the face a few times, you get paid to go to Zoom calls every once in a while for double the salary, and you get slapped in the face, you're like, whatever, I'll get another job. And you go get another job, do the same thing, okay, whatever. And you get fired again. And all of a sudden, you can't get a job, and now you're 2 months behind, 3 months behind, 4 months behind your mortgage. You're dipping into your savings. You're a little desperate now. You're going to go work for less so that you at least get something. And that's what companies did. They didn't go out there while the jobs are available and just start pulling people in as fast as they were there, or fast as the jobs available. They didn't. Companies started to recognize these same trends. These are people getting laid off, and now people are just getting laid off. They're still laying off people at higher salaries and willing to take people that are willing to take lower salaries, as you see that right here. So someone that's been laid off for like an entire year, they made $100K, they got laid off, they made $100K, and they made $200K after COVID to keep them there, and then they got fired and they wanted $200, and then they get desperate. Okay, I'll take $180. Okay, I'll take $170. Okay, I'll take $150. Okay, I'll take $100, my original salary. Oh God, please, I'll take a pay cut. Give me $90, give me $80. I know I made $100, but I need a job. Oh, thank God. Okay, honey, I got a job. Thank God. Family's saved. It's literally it. A year of struggling is enough to make people accept a lower salary. Now you're starting to see those jobs getting filled. And jobs getting created at the same time. But not as fast. You can't really see that in the data, but you can read it in the Bureau data. So essentially what happened was people are fired long enough, they're willing to get lesser wage for their job. And believe it or not, CPI trends down exactly the same time, reflecting that wage deflation. So essentially, companies fired people, kept the jobs open, waiting for somebody to come back worth either the price, efficient labor, or willing to take a lower salary. And you let people just be unemployed just long enough, they're willing to do that. And that's exactly what's happening right now. People are coming to take lower salaries. And because of that, I'm going to predict, I didn't even know what the CPI was yesterday. I'll predict CPI has just been trending down exactly the same. And if it is, then you've now solved the 5-minute problem of how can you predict what the Fed's going to do before they do it. Because I'm going to predict the CPI has been trending down exactly the same time. And that's exactly what's causing it. It's, if you know wage inflation is part of it, let's go ahead and get to that website. Wait. Okay. All right. So my trade still hanging there. It's only small position, waiting to hit that DD band if I get it towards the end of the day. It's not rocket science, you guys. There it is. Any questions? If you got that right, then I love you. If you got that wrong, please go to our fundamentals classes. We teach you all of that. That pivoted in July. That pivoted in May, June. See that? There you go. That's your answer. What's controlling inflation? Exactly what I said. Company had jobs available. People, at first, the company were like, I need a worker. I'll pay you whatever you want. Now companies are like, there's so many workers. You're going to take what I want to pay you. And now that power shift has gone from the worker saying, fuck you, pay me double, to the company said, fuck you, I'm paying you half. And you're going to take the job or you're going to starve. And then that power shift happened as the supply and demand of the labor market shifted from undersupply of labor to oversupply of labor. And that is the logistics of how long that takes, a whole year for that to shift. If you got that right, you're one step closer to whatever goal you have than everyone else in this chat room. It's not rocket science, it's a rocket scooter. I love it. Trademark. That's dope. But you can see how that works, right? And CPI is just plunging as that shift has moved into the power has moved in the hands of the employers. There are jobs out there, and there's this whole saturated labor pool of people that need jobs who are kind of feeling the burn. They've been out of work for a while. So now companies can compete workers against each other. Not only are they getting better, efficient workers, as now when you hold an interview, the original post-COVID trucker job, you had an interview Nobody would show up because they didn't want to die. One guy showed up and you're like, God, this is the only guy there, and he kind of sucks, but at least he's willing to do the job. Don't like him. He doesn't really fit. He's only been working for like 3 weeks. I no experience, and he wants double what we're gonna pay in experience. Whatever, just take him. We gotta get the stuff off the lot. Let's go. That caused inflation. Now they have the same opening. We have a job opening. 50 people line up with resumes, and you can compete workers against each other, get the best worker for the job, the most efficient person, the most experienced person, and the ones willing to you're either paying for talent instead of paying for desperation on your end, or you're paying less because the supply exceeds the demand. And so it's a supply and demand thing, basic economics. And that's why CPI is coming down. If you have anything to do with the Fed, then you've been lost for a couple of years. The FOMC rate hikes have nothing to do with the majority of the inflation we're seeing. It's controlling the other side of the coin, which is the credit. It mostly is going to be regulating the issuance of credit, loans, things like that. Higher rates make it harder for you as a consumer to go get loans in general, just a general trend. Not necessarily a direct effect, but overall, very high interest rates make it harder for people to go out there and get credit. Banks don't want to issue credit in high rate environments. So you slow down bubble forming, and that creates the other side. The Fed tries to control the 2% inflation by not allowing the economy to grow too fast, by regulating essentially what major banks do with their money, their deposits, and willingness to loan. Times Discord today. We're going to roll over in about 15 minutes. So right about 11 o'clock, we're going to go straight to a Zoom call. Everybody go to Discord right now. If you haven't signed up for the extended trial, sign up for the extended trial. Trade's up. Still sitting there about $1,600 profit. I'm loving it. We're having a good time. Really nothing else to say. I'm just waiting for it to take off. But today we'll do a full demonstration of futures and Rocket Scooter. Come check it out. We'll be the world's biggest, agnostic, most connected brokers, trade all different products inside of one platform with server-side protection of IP in your code for vendors to sell their tools protected. No one in the world does all of this together, except for us. We'll be the biggest in the world one day, and we hope you guys join us for the ride. Until then, you can lock in very low rate what we do. Your subscription. We're going to teach you today. Come to the Zoom call. We will show you how to get into Pro Plus for less than $100 a month. It's currently $200, and that's about to go up. So you can get in for a very low rate. It's called the Founders Rate. You can be with us for life. Very low monthly fee, and make sure you get that upgrade so that you can play with the futures and all the other cool stuff coming with it as soon as we launch. Love you guys. Thanks for tuning in. Killer day today. Bull long up, nice and clean. Resilience is good. DD's good. I mean, you can't beat it. Golden setup. It's perfect day. I mean, Rock Scooter textbook 101. Love you guys. See y'all later.